I guess I'll just do it next to you because the TV doesn't want to work. All right, let's run this shit. And I will be using the whiteboard behind you, so sometimes you might need to turn around. But let me start the timer. And here we go. So let me ask you, first thing I always ask all my clients, what is your goal with like financial investing? What's the end game? Are you trying to save up for something? Are you just looking to retire earlier than normal or have like a safe nest to retire in? What is your goal?
My end goal is to like be like financially stable, you know? But like I guess like if you say like really end goal, is to look, like have a house in Beverly Hills, you know?
Okay, I see you. Actually, this is where I start writing on the whiteboard.
Okay.
So we have your goal, right? First, and the most achievable goal is to be financially stable. Okay, that's my goal as well. And then secondary goal, hopefully, is to have enough disposable income to live it up, as I call it. Live it up a bit, you know, enjoy the nice things in life. Okay, regarding that, we're actually going to look more towards this one today. And I want you to, this is like a 20-year goal. So let's try to break it down into something you can do in the next year. So in the next year, most people, I'm going to ask you, how much income are you making right now?
After the business, dude, I'm like surviving off of, I'm doing stocks right now.
Okay.
It's kind of like, you know, up and down.
Up and down, yeah.
Yeah, other than that, I
Per,
guess
like per month, how much would you say you have coming in?
I'll say like 400.
400?
Yeah.
And is that after all your expenses or before?
Yeah, all my expenses. Okay,
so this is post expenses. That's good. 400 is actually not a bad number to work with. And it's very close to the recommended number that I give people, which is around this much. And there's a very specific reason why it's this weird number. It's because I want people to invest a minimum of $7,000 a year. And for one reason only, something called a Roth IRA. Okay, this is our first investment advice. This is what I'm going to teach you, and that's what's on my screen right there. Have you heard of this?
I heard of it,
Yeah. Do you know like basically what it does, why it's good?
No, I just like heard of it.
Gotcha. Okay. So luckily that's why you're here, right?
Yeah.
So essentially, when it comes to investing, there's two paths you can take. There's the traditional path where you use a just like a normal investing account, right?
Yeah.
So that would be here for me. So there's the traditional path, and then there's the Roth IRA path. And I'll explain the differences between the two. With the traditional, there's no limit in how much money you can put in. You get taxed twice, and I'll explain that. And there's, what is it? There's less restrictions, so that's one of the positives actually. Less restrictions. But with someone with $400 income and someone looking to build this, you're actually going to want to look here. Reason so is because this one is, well, there is a limit. That's the only con. And then this one is only taxed once. And this is the biggest point I want you to remember. When you invest normally, you're going to get taxed on your income that you put in. So basically, let's say you work a job, right?
Yeah.
And you make a paycheck every week. That paycheck that you make every week, or every 2 weeks, or every month, it's already taxed. So that's the first time you get taxed. And that money, after you make it from your paycheck, you can put it into this, right? Very straightforward.
Yeah.
But you also get taxed again. Let's say you buy a stock, and then you sell the stock. And when you make profit off of that sale, that's called capital gains, okay? Anytime you make a profit from a stock sale, that's capital gains. Or if you get like a dividend payment, that's also capital gains. So you're taxed again here. And usually, you get taxed anywhere from, luckily 0%, all the way up to 50%. But for people like us, the number you want to be worried about is around here, 22%. So with the Roth IRA, you only get taxed on the income you put in. And that's it. Any capital gains you make in this account, you can take out and there's no taxes to it, which is why they put a limit on this.
Yeah.
And the limit is this number.
7,000 a year.
Yeah. You are allowed to put in 7,000 a year. It's called your contribution.
Yeah.
And this is the max contribution. And if you, let's say you don't put in this 7,000 for 2024, when 2025 comes around, you're going to miss the opportunity to put this in 2024. So that's why I recommend you put in this much every year and try to max it out before the year ends. And this is why I gave you this number. So we're looking at a $163 difference that you need to make up.
Yeah, I get you. I have some savings, like, 4K savings.
4K?
Yeah.
Actually, just keep it there.
Okay,
Keep it there because actually, out of the 4K, I recommend you take out 2K.
Okay.
Because 2K is enough for you to live off of for, let's say, like 2 or 3 months, right?
Yeah.
Yeah, so 2K. We're going to take that out and we're going to throw it in this bad boy, okay? So that's going to up your income to 2,000 divided by 12, and that's going to be, I can't do the math, but whatever 2,000 divided by 12 is. So let's just say that adds like another $100 a month. So we're looking at like around $500 a month that you can invest in. The key to investing is you have to be consistent with it.
Yeah.
You always want to set a target of how much you want to invest per year. For me, that target is $22,000. For you, I want you to make this your target, $7,000 a year to invest in.
What do you use? So right now in stocks, I use Webull.
I use Robinhood, but it doesn't really matter.
Okay.
The reason I use Robinhood is because it's very simple. The user interface, like the app, is very intuitive. And every person that I come across as a client and I show them how to invest, I show them through Robinhood because it's just nice to look at.
Yeah, I get you.
And I know you came here for investment advice, so let's actually get into that and what specific stocks I would buy. So would you want to look at my investing portfolio first or my Roth IRA?
I guess both.
Okay, yeah. So let's sit down and take a look at it. Open up yours as well. And then we'll do a cross comparison here. It's okay. I'll see if you're making any blunders or if there's things you can improve. So how much would you say like you have in total in your thing right now?
Like in this account?
Yeah, like in your investing.
Investing?
All your investment accounts.
All my investment. With everything, I'll say like, it's not that much, man. It's like 500, we're starting out.
Hey, it's okay.
Yeah.
We're just starting out.
This one just has like 200.
Okay. And what do you currently own? NVIDIA?
I used to, and I sold it.
Okay.
So I'm gonna be real with you. I got scared like once it like dropped down.
Yeah.
And I was like, I'm gonna just sell it. Yeah.
Okay.
These are like my past trades.
Where are your current holdings? I'm not too familiar with the Webull interface because it's very like busy.
So right now I have no current holdings.
Oh, so is it all in cash?
Yeah, this is like all like raw.
Oh, okay.
Yeah.
Okay. So in Webull you have $227 to play around with.
Yeah, basically.
Okay.
And I can add more as.
I see. Well, here's my portfolio. Starting off with crypto, I don't have that much crypto. My biggest share in crypto and position is just $377 worth of Bitcoin. I bought in for 300. It's went up 77. Great, right? I probably bought in like a year ago, not too far ago. I'm not a big believer in crypto, but I'm a tech guy, so you're gonna see that reflected in my stocks. Most of my holdings are gonna be straight tech. So as you can see, Apple. I'll show you all my big winners. Apple, IBM was a huge winner for me, and then I have Tesla, just one share. Not too. Actually, I've lost on Tesla. My biggest winner is NVIDIA, and then Google, Microsoft, all the Magnificent Seven. Have you heard of that term?
Amazon, Google.
Yes,
Microsoft.
the biggest in the industry.
Yeah.
But here are the stocks that I want you to keep a close eye on. One, the Magnificent Seven. So let's list them all out. These are like literally my biggest winners. It's I call it brain dead investing. If you literally just put your money into these, right now is a kind of a bad time because they're very high and overvalued. So I'll wait a little bit.
Post-election.
Yeah, post-election, the past 3 days, I've been up about $2,000, and that's translates to about 8%. Because every day it was literally like boom, $1,000, boom, $1,000, because of the election.
Yeah.
So you have Google, right, or Alphabet, and then you have Tesla, and then you have Microsoft, and then you have Amazon. 1, 2, 3, 4, 5, 6. We're missing one. Meta, I believe. It might be Walmart or Meta. I forgot. But these stocks, as you can see, they're all tech. Those are the ones I believe in the most because, as you know, we're moving into a very tech-heavy world where everything relies on AI, everything relies on tech. And these guys are the leaders of it. This guy's the leader of VR. This guy is the leader of web services. So they have AWS, which is Amazon Web Services. This is the #1 software in the world for our computers. They have Windows, right?
Yeah.
These guys, they just make tech, like consumer. They're the #1 consumer tech in the world.
Yeah.
Right? These guys are selling, I call it the shovels, to the AI gold rush. Right now, everyone is trying to get into AI, and the only company that has no real competition, that is making it possible for companies to do AI is NVIDIA. They have no competition. AMD is not even close. And then Google, they're kind of on a decline, so I wouldn't look into Google too much. And then, as you know, Tesla, they recently unveiled their SpaceX thing, their van, all of that. So they've been doing pretty well. So as you can see, today is a little bit of a down day, but that's normal. I'm going to teach you about like market movement, and I'll teach you how not to be scared of how stocks go up and down every day.
Yeah.
That's one thing I do not want you to worry about. Like, don't worry about daily movement. So let's start here, and we're going to call this pre-election. So last week, all right? Let's say I'm Steven, and I have my stock. Let's call this NVIDIA. So NVIDIA was around 139, I would say, pre-election. Okay. Let's say some big event happens, like the election, and now NVIDIA goes up to 144. This was the day of the election. I'm like, great, NVIDIA is up. And then one day after election, it actually goes up even more, right? It's around 148.
Yeah.
But here's where the scary part comes in. Today, okay, it didn't drop that much, but let's say it dropped to like back to 139 or even below. Would you say like you would get scared at this point?
Yeah.
Okay, here's what I want to teach you. This is fine. This is fine. This is all within a span of a week. Here's how not to be scared. What I want you to always look at is when you click into a stock, you always want to go to its 5-year performance, if I can do that. There you go. Okay, so 139 is like maybe like right there. 148 is up there. If it drops back down to 139, whatever, you're still here instead of like down here, right? So the biggest lesson I always tell my investors is disconnect your emotions. Trading and emotions do not mix well together. So if you're mad, you're sad, even if you're happy, you probably really shouldn't be trading. You need to have like calm when you're trading so that you can make the best informed decision you can without these factors affecting you. So if I bought NVIDIA here, it went up to here, and it went down back to here, do not sell. One reason is because there's a concept called time in the market. Generally, just looking at the 5-year graph here for NVIDIA, it doesn't matter which company I'll click on. Like, let's go to Apple. Time in the market beats everything. So as long as you're just holding, doesn't matter when you buy. This is your buying point. 5 years from now, it's probably going to be up here. There's definitely going to be ups and downs like along the way. Right? You might even go down below halfway through the journey where your stock goes below what you bought it at. So what? Right? Time in the market. So disconnect your emotions, time in the market. Like pick a company, click on it, and then do the 5-year graph. It won't matter what company you pick. They generally have gone up. So 5 years, just scroll to the right a bit.
Yeah.
So look, let's say I bought here, right? 5 years ago. And then I see it go here. Most people would sell. But actually, when you see a big drop like that, here's another strategy I'm going to give you. You buy. If you know a company, for example, like Meta, they're so like big, they have such good business fundamentals. That's another term. If a company like Meta has strong business fundamentals, they're like one of the biggest leaders in their market. Even if their stock drops, you have to look at why the stock dropped, right? Is the company imploding? Then yes, I would sell. But if the company isn't imploding and the only reason the stock is dropping is because of some like random news, like let's say Mark Zuckerberg like says something on Twitter and people didn't like it, and the stock dropped because of that. So what? That's where you buy, right? So their stock goes down, that huge dip right there. Yeah. Boom, you buy, and guess what? If you made that decision to buy then, and you know that Meta is not going to implode and explode itself anytime soon, 112 then, you're up like $400 per share. So that's why I want you to disconnect your emotions and only look at the facts. And the facts in Webull, I don't know where you would find them, but you can just look at like all their earnings. As long, like those numbers may seem confusing, but there's only one thing I want you to look at. Their their PE ratio, and then their year-over-year growth. These are the only two metrics that you should be really worrying about. So I'll explain the first one. Basically, with PE ratio, the expanded form is price to earnings ratio. And basically what this tells you is that is the company making money or are they losing money? And for a solid company like Meta, their PE ratio should fall between 15 to 20. It's like let's see what their PE ratio is. They might be higher because they've grown so much. Hello, PE ratio, 27. So it's a little bit higher than 20, but there's a reason for that. So I'll explain to you what the numbers mean. So let's start with PE ratio 0 all the way to let's say 100. And there's even negative PE, but you'd never want to buy a company with negative PE. That means they're losing money. Okay, that means they're imploding. Yeah. So basically, with the PE ratio, it tells you how stable the company is, right? So if their PE ratio is around here, so 20, that means the company is extremely stable and they're making money every year. Solid company to invest in. Companies with a PE ratio of 20 are probably like Google, very stable. Probably something like Amazon, very stable. Something like Walmart. All companies that have been in the business for a long time and still continue to grow every year. So these are generally like the biggest companies, the most stable ones. However, you're going to see PE ratios, for example, in NVIDIA's. Let's take a look at NVIDIA. Hello, where is it? There it is. PE ratio of 69. So you may ask yourself, why the heck is it all the way up here? That's because investors are expecting NVIDIA to grow way beyond what is considered normal. When you see a PE ratio like that high, that means investors are extremely confident about the company. So that's why you've seen NVIDIA's price continue to skyrocket month over month. And that's why I continue to buy it. Every time I see a dip in NVIDIA, let's say it drops to like 130, I'm going to buy in more. Because I know that NVIDIA will continue to sell the shovels to the people trying to do the gold, which is AI. Right? That's back in the gold rush. Those were the people who made the real money, not the people mining gold, but the people selling selling the shovels. So far, do you have any questions?
It's just like it's more like Roth AI. Like, could you show me like?
Absolutely.
Yeah.
This is Roth IRA is even easier than anything I'll explain to you before. So essentially, the strategy with the Roth IRA is one, you max it out every year.
Yeah.
That's to maximize your tax savings. You're essentially hiding your money from the government in a legal way, right? And basically,
like Roth AI is like its own separate thing, right?
Yeah, it's a whole separate account from your regular investing account.
Okay.
And it's meant for retirement. This is your backup plan, no matter what. Like, let's say you go broke over here, whatever, you still have your Roth IRA, right? You still know you're going to retire with like a couple million in the bank. And it will jump up to a couple million. And I'll show you how. So I've been investing in my Roth IRA since 2021. So that makes it 3 years.
Yeah.
First year, the limit was only 6,000 because they didn't increase it to 7,000 yet.
Yeah.
So 2021, I put 6,000 in, so my account was at 6,000. Right? Second year, they increased the limit to 6,500, so now I'm at 12,500. Okay, now it's the third year, I put in my 7,000, so 12,500 plus 7,000 equals about what?
19,000.
19,000. But as you can see, the account has gone up quite substantially, right? And that's because, like I said, one time in the market, and just the amount of money I'm putting in allows it to grow further. Take a picture of that with your phone.
Yeah.
These are the only 4 you should be buying, essentially.
And that's from the Roth AI, right?
Yeah. Essentially, what you do in a Roth is you take money, like you normally would, you put it into the account here, that's where it's going to show up. It's your cash. Most people stop right there because they don't understand that in order for your Roth IRA to grow like this, you actually have to buy something with it. It's just like a regular investing account. So the reason I bought these is they're incredibly diversified. They still give decent returns. The average is 10% per year. Because have you heard of the term S&P 500?
Yeah.
Yeah, so this one tracks the S&P 500. This one tracks basically the S&P 500, but it leans more heavily on the financial sector. This one tracks the international market. So the global international stock markets, this one tracks. And then this one tracks the fastest growing companies in the US. So one, I've incredibly diversified myself because the S&P 500 is the top 500 companies in the US, right? They're not failing anytime soon. So let's just click into this one. I have 34 shares. Each share is around 549 right now, but I want you to look at the average cost. So you always want to look at your average cost. So my average cost is 381. You take that number and then you minus that number, and then you get your profit per share. I'm a pretty good amount. As you can see there, $5,000. Not bad, right? Just over 3 years. 3 years. And all I followed, this. That's all I did. I can't put in any more, and I'm not going to put in any less because I set that standard for myself, right? Whatever happens during the year, I will make sure I put in this per year.
And like, let's say like if you want to withdraw.
Okay.
Because of like something.
Great question.
Yeah.
So the rule with the Roth IRA is that you can withdraw whatever you put in. So we call it withdrawal contributions. However, I can't withdraw the gain. This 5,000.
Yeah.
But that's fine. I mean, I can still withdraw this. I just can't withdraw the extra whatever it grew to.
Yeah.
If you do withdraw the capital gains, you just get hit with a 10% penalty. So they'll tax you the capital gains tax of this alongside that. So 32%-ish. But this money, I always tell myself, it's money that's gone. I can't spend it. I can't look at it. I don't think about it. It will grow. Right? That's why I call it brain dead investing. You just put it into these four. Right? VU, VTI. This one gives me hella dividends. And then you just forget about it. And then by the time you're around here to here, 40 to 55 years old, you're going to have millions in the bank. It's going to grow like crazy. Every dollar that you invest into here, or even into here, as of 2024, will become $17 about by the time you're here. So think, every time you're about to invest, remember this ratio. Every dollar you invest now will be about that much when you retire. And that's pretty sweet, right? That's just free money that you didn't have to think about. You literally just put it in, and then you have another Omar working for you while you sleep, while you're eating, while you're having fun, while you're working. There's 2 of you, or 3 of you, or 4 of you, depending on how much money you have in. The more money that you have into your account, so 35,000 for me is a decent amount. That's basically a whole nother Steven. And then once that goes up to 100,000, that's like 2 different Steven, and then so on and so forth. If you ever watch Naruto, you're Shadow Clone, right? So let's take a look at. I'll give you 2 strategies to invest. So with this one, it's going to grow fast. So let's look at the growth. So over just 1 year, usually the return is 10%, the average. But just look at that one. What does that say?
36.82.
So it's 3.6 times the normal return rate. Crazy, right? That's because the economy has been doing extremely well. And the price may look like a lot, but the cool thing with Robinhood is that you can buy like fractional shares. I'm not sure if you can buy fractional on Webull. And fractional shares are basically, you can buy like a portion of a share. You don't have to buy like the whole share.
You think it's possible for me to switch? Like, I mean,
it's very easy to switch. They make it very easy. Because when I look at your screen, I'm like, what the hell's going on?
Oh, yeah.
I want to simplify my investing. I don't need it to be complicated because I'm not a day trader. Right? Here's the second strategy. You can either go the growth strategy, as I call it, with VU, or you can do the dividend strategy. And do you know what a dividend is?
A dividend is like a share of a company?
You're close. Let's section out a part here. So a dividend is essentially a thank you from the company that you buy. They're giving you a portion of their profits every quarter. So that's their way of saying, thank you for being a shareholder of our company. We're going to give you a portion of our profits. Okay? So every quarter, some companies do it every month, but generally it's every quarter. You're going to receive a small payment in your account from the company. Not all companies give out dividends, but the ones that do, this is how it works. Every quarter or every month, they're going to give you a portion. And that portion is usually anywhere from 0 point something percent, like 0.5%, all the way to like, I've seen like 5% and up. But the usual rate is around 2 to 3%. That's a pretty decent dividend yield. But the way to calculate like how much you're going to get in dividends per quarter is you have to take the 3%, let's say, and you divide that by the 12 months in a year. And then you times that by 3 because there's 3 months in a quarter. And then that's going to give you your dividend rate for every quarter. But that's not, you don't really care about that because you're going to get your dividend and you're going to know like about how much you get every quarter.
Yeah, it just like pop up.
Yeah, it would just pop up. So the reason I bought this one is because for every share, so $29 per share, I have about 467. Plus, I also have more in my investing account here. So 97 plus 467, like 600, right?
Yeah.
And then if I go down, we can see that their dividend yield is, for the whole year, 3.64%. So you take that, divide it by 12, and then you times it by 3 to get your quarterly dividends. You can see their PE ratio, like we talked about, really stable. It's between that sweet spot, 15 to 20. That means the company is not growing really fast, but it's still growing at a good, steady rate. Anything higher, like NVIDIA, it's growing like really, really fast. Yeah, exactly. Yeah.
And so there's traditional, and then there's Roth AI, and there's crypto too, no?
There's crypto, but crypto is too like this,
Oh,
right? If I wanted to reach this, and I wanted to do it with the highest probability possible, no crypto. Okay.
Yeah.
Bitcoin is the only crypto I would buy.
Bitcoin.
Yeah, it's the most stable.
And also because you know how like gold and silver
Yeah.
is always gonna go up.
The reason I don't like gold and silver is because it goes up too slowly.
Oh, okay.
One thing about investing that you have to account for is always there's always inflation, right?
Yeah.
And inflation is about 4% every year. So let's say gold goes up 4% every year. Well, your net gain is 0.
Yeah.
Yeah. But if I look at something like the S&P 500 with VU, you saw it went up 36%. So you replace this number with 36, and then you get like a 32% net gain for that year. You always want to invest in something, right? Whatever you're researching to invest in, it has to beat this number. If it's not giving you at least 4% return every year, don't bother.
Would you say trading is like your biggest asset?
This, like investing?
Yeah, investing.
Just know that you have to make a distinction between trading and investing. Trading is like you're trading every day or frequently. Investing is you put it in and you just hold it. I do investing, and yes, it is currently my biggest asset, and that's my end game. It's going to just keep growing, and the dividend payments are just going to keep coming. And I already calculated. This is part of the dividend strategy. By the time I'm 40 years old, I'm going to receive about $6,000 a month in just dividend payments. So by then, I could literally just choose to stop working and then just keep growing my money and work on the things I actually enjoy. So generally with dividend strategy, it's a 20-year period. That's why I'm starting when I'm 21 or 20 or 19 or 18 when I started. And then I just have to wait 20 years and keep putting in money consistently, and then
You'll be a millionaire.
easily. I think I'll reach $1 million before I'm 30. Because at the rate I'm going, this is just what I'm doing now.
Yeah.
Once I already have, I'm getting my full-time job this July. I'm already secured a full-time offer with my tax company. So they're paying me $75K a year. I can definitely, with that money, plus my business, selling my product, I can definitely put in more money than this per year to invest. But as a student right now, I'm working part-time, I'm doing that, and I'm selling my product. I'm making probably around $40,000 to $50,000 a year as a student, right? And I'm not even working a full-time job. I'm just working part-time. I work in transportation, so in the little booth.
Yeah.
It's the easiest job on campus, and I'm very grateful that I have it.
Okay.
Yeah, I literally sit there and do my homework. So.
That's cool. Do you believe in real estate?
I actually own 3 houses.
Really?
Yes. So I have. Man, there's the voice caller. It's gonna erase you.
Yeah.
Do you want to take a picture of this?
Yeah, sure.
Yeah. You'll hear it in the video too, but just for record keeping, take a picture, and then actually remember to text me on Discord, so then I can send you all my resources that I use.
Yeah, sure.
Yeah. And I have a whole slide deck that I'll send you, so you can go over it, all about finance stuff.
Yeah.
I'm getting my eraser for the whiteboard, so I can erase a part of it.
So you own 3 houses then?
Yeah, I'll explain that to you right
yeah.
now. That's part of investing. But I don't recommend going to property. There's better ways to grow your money, because property is a pain in the ass. Like that ass. So, first house in Rosemead. That's where I grew up in.
Okay.
Right? Second house here in Riverside. This one bought in 2021, right, when I first came to school.
Yeah.
And then third one is in La Puente, which is close to Rosemead, in the San Gabriel Valley. So I didn't get this through purely my hard work, right? It's this one. My mom is going to transfer it down to my name.
Okay.
Second one, I co-own the house with my friend. So we have 50-50 on it. I don't know, 50-50. And then this one, rental property that my mom also bought, but she's giving me like the title to manage, right? To rent out to people and to manage.
Yeah.
So as you can see, this is not me. This is the resources I had available to me, the people above me. Right? So just know that all of this in your investing journey, you're not going to do it alone. Hopefully. If you do it alone, your life's going to be really hard. Hopefully, you have people around you to support you.
Like you.
Exactly. So just know, like, if a lot of people online be yapping, like, I did this by myself. No, it takes a village, as you can see here.
Yeah.
The goal of these properties is to, one, have something that can withstand the test of time, because land, right? Land doesn't lose its value very easily, especially in these areas. Riverside is a developing area, extremely fast, developing extremely fast. This is near LA, so it's already valuable.
Yeah.
This is also near LA, already valuable. This has gone up $200,000 in value, plus the rental income we earn from it.
Yeah.
This house has gone up like $500,000 in value when we bought it back in 2002. And then this house, we just bought it at $600K. I don't know what the value is right now, but we plan on generating just rental income. But right now, since we're worrying about a 1 year time period, don't even think about this.
Okay.
That's not something that a college student should be worrying about unless you are very well off. Right? Then I would love to talk to you about that.
Okay.
So just remember, what I want you to take away from this lesson is that make this your new standard, okay? $7,000 is now Omar's standard every year that he should be putting in. Ignore the 22, this. This is the monthly number you need to have to hit that. So you need to find a way. I never tell people to save more money. I always tell people you have to earn more. I don't care how you do it, right? If you're making $400 now per month after your all your expenses, figure out that way to get that extra $163. That might be a weekend of working at a job, like another part-time job, or washing someone's car, right? I don't care how you do it, just get up to this number, okay? Minimum. If that means cutting down, like you don't go partying or going out as much with your friends, that's a sacrifice that you might need to make, and it's up to you to decide that.
What are your biggest beliefs when you're doing business? Or something like advice?
So like just general life advice?
Yeah, general life advice.
Okay, so my favorite one is be comfortable. I won't write out the second part. Be comfortable being uncomfortable. There's a lot of times in life where you either grow or you don't. And the thing that decides whether you grow or you don't is how uncomfortable are you willing to be at that moment. So if you have the choice between this weekend, I'm just gonna lounge around, or this weekend, I'm gonna go out of my way, out of my comfort zone to do something I normally don't do in order to learn a new skill, or in order to meet up with someone that I know can probably teach me a lot, or to work that 12-hour shift that you didn't want to work, right? You have to be comfortable being uncomfortable, 1. 2, you have to focus on the things you can control. So focus on what you can control. And for you and for me, we're both humans. What can we control? I can control the decisions that I make every second, right? I can control whether I go to the gym today. I can control whether I eat a good diet today. I can control whether or not I spend that whatever X amount of money on something I don't need, or, focus on what you can control, ignore the rest. So let's say I posted a video, like I'm a content creator, right?
Yeah.
I post videos. Once that video finishes posting, there's nothing I can do about it. Performs well, great. Performs negative, like not as well as I think, whatever. I can't control that, so I don't think about it. I post a video and I move on to the next thing I can control, which is thinking of an idea for the next video, going to sleep early, or so just this. And then lastly, try to, it may sound very corny, but don't overthink things. The number one thing I see people do and stops them from getting to where they want to be is overthinking. And what I mean by that is that, let's say today you came to me and we finished this lesson. You walk out of the room, you're like, wow, I just learned so much, and I'm so excited to start. That's the key word, start. You actually have to start. Without action and without doing what you intend on doing, you're just going to be stuck here with no tangible results to show for it. So I actually made a video on that yesterday, but this is one topic I'm very passionate about. there's so much thinking you can do. There's so many books you can read. There's only so many YouTube videos you can watch before you actually have to do something. If you never get here, then you're never going to see if you fail. You're never going to see if you succeed. You're never going to see if you will grow. The worst thing that can happen is that 1 year from now, let's say you started here, you're still here 1 year later, and you're not up here. That's the worst thing that can happen, right? Don't ever let this happen. Don't ever let Omar now be the same Omar 1 year later. 1 year later, Omar should be maybe where I'm standing, teaching someone who's here to get up to here. The only time you should look down on someone is if you're willing to help them get up.
Just stay humble.
Exactly. Never be looking down on people unless you're willing to help them. Right? So these 3 things. Okay? Be comfortable being uncomfortable. 1. Focus only on what you can control. Ignore the rest. Don't overthink things. Literally take action. Okay? I don't know why I X'd it out, but literally take action. Let's see. We are 17 minutes. So you have 17 minutes?
Okay. Credit cards.
Okay, let's get into that.
Yeah. So, right now I currently have a Discover student credit card.
You picked a great option?
5%,
Hell yeah.
Yeah. And then I have a Bank of America.
Hell yeah.
I could choose 3% on dining, gas.
I have the same one.
Oh, really?
Yes, I have the Discover and the Bank of America. I use the Bank of America as my primary.
Okay.
I'll explain credit cards. Are you trying to grow your credit score?
Yes. So
Perfect.
I can, I mean, the goal is to have my credit score higher.
Yeah.
So I could
Borrow at a very low interest rate.
Yeah.
Okay. So, what do you think your credit score is right now?
Well, I currently once I turned 18, I got my credit. I think right now it's I've been pretty good.
Like 720, 7.
Like 7, I'll say 710.
That's solid, because you've been doing it since you're 18. I did the same thing. I started when I was 18. Since I am 21, almost 22 now, my credit score is last I checked, like that. And the way I got from here to here is through following a very simple strategy. Right? With credit cards, the way they work is you have your card and you have your checkings, right? And let's say you make a purchase, right, of $100, and you use the card to make that purchase. So what you're telling the bank is that, hey, bank, I'm gonna borrow $100 from you, and I want the money now so I can make the purchase, and I will agree to pay that $100 back to the bank within a month. Right? They give you 1 month to pay back, and then after a month, bad things start happening. That's the simplest way I can explain a credit card. You borrow money from the bank, you agree to pay back the money in full within a certain time period, which is almost always a month. And the way to grow your credit score is you literally just have to pay it off in full before the due date. Then the due date is always listed on the app. Right? You can call your banker. You can ask the app AI in Bank of America. They have a little AI that you can ask into the app. Like, when's my credit card due date? It'll tell you.
It's like separate from the statement date.
Separate from the statement date. So with the statement date, that's the bank just looking at your credit card and seeing how much you're using it. Usually your statement date and your due date is very close together. My statement date is on the 17th. My due date is on like the 18th or 19th. So I know when my statement date is here, I know I should be probably paying off my card. This is literally it. This, over time, will grow your credit score. Credit score is a combination of multiple factors. Are you paying off your cards on time? How long have you had your credit card for? Right? It's called your credit age. So the longer you had your credit for, the better your score will go up. The more times you have paid off your credit card in full without any late payments, the more it go up. And things you want to avoid with credit age. Avoid opening up too many cards. Every time you open up a new card, it will lower your credit age because you're introducing a card with 0 months, 0 years into the mix. It's just simple math. If I have one card that I have for 5 years, and then I get a new card, my second card, and it has 0 years, it's going to bring down my average credit age down from 5, where it was before, down to whatever 5 minus 0 divided by 2 is. Yeah, so now my average credit age is 2.5 years instead of this, which will hurt my credit score. So avoid opening up too many cards. 2 is good. I have 4, but I open most of them up very early on. So these are the ones I have. And I'll show you some strategies to min-max your percentage that you get cash back. So Bank of America, my 3% is used on online stuff. anything online that's not Amazon. Okay, Discover. It rotates 5% quarterly, so I almost never use this card actually.
Oh.
If I need to pay for gas, for example,
Yeah.
I just pay in cash, because cash gives you a lower price at the pump. And then I have my Citi. I almost never use this one. This one's trash. Don't even worry about that. I haven't used this in years, so I hope you never want to close a credit card on your own. Another thing you want to avoid. Always let the card close by itself. And the way you do that is just don't use it. Just let it sit, and it will eventually close by itself, and it won't hurt your credit score. If you do decide to close it by yourself, it will hurt your credit score.
Oh.
And then lastly, my favorite card, my Amazon Prime card. Oh God. And that gives me 5% back on Amazon. And that's where I do most of my shopping. And busted. These two in combination. And most things we buy are online.
Yeah.
The only card I will be missing is like a restaurant card. So if you have these two, just add a restaurant card on top of that, and then you're set. Do you travel?
I can't travel. You know, like once like big goals, my big dreams.
Yeah.
Traveling. Yeah.
Once you start traveling, an Amex will be good.
And those points and all that
Yeah, the points. It gives you like 5x points. So this. And it looks cool. So I totally get it.
yeah.
Yeah.
Is that you go too?
Of course. I want to pull that bad boy out and like on the table, like clunk, 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 clunk. You know the Amazon Prime card is actually metal.
Oh really?
Yeah, so I do that with that card. But remember, don't close the card by yourself. Let it just rot if you don't plan on using it. And then also, don't open up too many. Open up what you need. I recommend 3.
Yeah.
Online, if you shop on Amazon, and then a restaurant card. And then eventually, once you travel, then your Amex. Another thing to avoid, every time you open up a card, or let's say you apply for a loan,
Yeah.
they're gonna pull a credit check on you. And there's 2 credit checks, hard versus soft. Soft does nothing to your score. Hard does something to your score, it drops it. And this is done through applying for loans, applying for new cards, and that's basically it for us. Like if you're buying a house, they'll do it, but we're not buying a house. And then soft is just like you viewing your credit score. And then certain times when you're applying for stuff, they do a soft as well. But generally, the only time this soft is happening is when you're looking at your own credit score. And you can just go on your banking app or Experian or Credit Karma and you view it. It doesn't affect your score at all. But if the bank views your score, then that's when this arrow goes the other way.
Like FICO is a good way to like measure where your credit score is at?
Yeah, your FICO score
Yeah, FICO, yeah.
is the same thing as your credit score.
Okay.
These terms are interchangeable. So this is the same as that.
Yeah.
The 3 companies that manage your score are TransUnion. The scores will differ between the 3 credit companies. TransUnion, and then you have I think Credit Karma? I don't know. And then last one is like Experian. These are the 3 boys that look at your credit score. You don't have to worry much about them. Just know that if you look here, your score will be different than if you look here, and then if you look here, it's also going to be different. But it's not going to be different by a large amount.
Yeah.
Your score is already good. You're above a 700. Your standard now is to remain above a 700. Don't ever let it drop down because you missed a payment. Every time you use your card, make sure to pay it back in full. Do not do the minimum payments, or else what's going to happen is that, let's say you do a minimum payment of like $10. That's what the card tells you. Oh, you can pay off $10, and you won't accrue, like you won't hurt your credit score. But what's going to happen is that you're going to be left with $90 still that you have to pay, times whatever interest rate, which is usually like 22%.
I hate loans, man.
Yeah. But don't be scared of this. I use credit cards basically like exclusively. But the reason I use it is to grow my credit score. It's never hurt me because I always make sure whatever amount I spend, whether it be 100, 1,000, 10,000, I never spent 10,000 on my card. Max is like maybe 3,000. I make sure I have enough money in my checkings to cover that. Never spend more than what you have in here. But a better rule is never spend more than of what's 50% in here. So if you have 1,000 in here, 50% of 1,000 is 500. So do not spend more than 500 on your card because you never know what's going to happen. If you have an emergency or something, you're going to need that 500 to save your ass. Right?
I guess, yeah.
Yeah.
And also, do you believe in dropshipping?
I've know people that do it. It's not a bad option, like if you know what you're doing. I personally don't have any experience dropshipping, so I couldn't tell you anything about it.
Oh, okay.
Yeah.
That's cool.
It's not bad though. You just need to be good at marketing, which is what I'm practicing right now. Right?
New skill. That's good.
Exactly. Always be uncomfortable.
Yeah.
If you're young right now, how old are you?
18.
18. Damn. If you're 18 right now, damn, you're so far ahead of me. When I was 18, I had no one to teach me this.
Really?
I started March of 2021, so 3 months after I turned 18. Like you're here, you're learning from someone who has done all the mistakes already.
Almost like you should do so. Like,
Not that many actually, but I'm giving you the advice in a very like concise way.
Yeah.
You're so far ahead. This is actually crazy. I didn't learn what I learned now until literally like when I was 20. Like I didn't get a really good grasp of it. Grasp. I can't say that word. Grasp until I was 20. So it took me 2 years to really like lock in. For you, I want you to lock in here. And what I mean by locking in is not like slaving away in your room, just grind set every day.
Yeah.
Locking in just means being uncomfortable every day. Doing what you need to be doing instead of doing what you want to be doing. There's a difference.
Yeah.
There's stuff you need to do, like growing and getting better and learning new skills.
Yeah.
And there's stuff that you want to do, lounging around. We humans, our psychology wants us to do this. It's just basic like survival. Survival tells us that we need to be using as little energy as possible, being comfortable. But we're no longer like surviving, we're no longer hunting for our food. We don't need to be in this low energy state anymore. We have the luxury, we live in a first world country where we have the opportunity to go beyond, to be uncomfortable every day. And you will literally, it's not linear growth. This is Omar now, when he's 18. You won't recognize yourself by the time you're 21. And the graph's not gonna look like this, it's gonna look like that. You might be here when you're 21. This is how my graph looks. When I was 18, I had $1,000 to my name from working Instacart, right, delivering groceries. Like here I am, I have almost $100,000 in the bank. And all I did was, I did what I needed to do instead of what I wanted to do. But I'm not perfect. There are certainly weekends and days where I get home from school and I just rot, right? Not everyone's like a robot, and certainly not me. So don't be too hard on yourself, okay? It's not always go, 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 but make it a standard that maybe 70% of the time, 70% of the week, I'm here. 30% of the week, here. That's how you keep it sustainable, right? There's balance.
And how do you stay motivated like during that balance?
So my motivation, one, here, I want to have fuck you money. Like I want to have money where I can say no to like if I need to work today.
Yeah.
Like I don't want someone telling me, hey Steven, show up at work at 7 a.m. tomorrow. You have a project due for your client, like from my boss. I'm not even making the money from the project, but my boss is telling me, we have this super important project that we have to deliver to the client in 2 weeks. Get it done now. And I'm working like 60 hours a week trying to get it done. But I'm not even seeing the profits for it. They're giving me an hourly wage, but it doesn't correlate to my performance. I want something, what motivates me is that the businesses I'm doing and the work that I'm doing is based on my ability to do what I need to do and not someone telling me that you're worth this much an hour. I hate that. Right?
Yeah, so like value for your money.
Yeah, exactly. I want to, the fuck was that? Okay. Just know that everyone's gonna have to work, regardless of, you know, if you're me, if you're you, if you're like some billionaire, you still work. But you might as well get paid. Might as well get paid well for it. Like everyone's gonna work on average around 40 hours a week. Whether you're a business owner or an hourly employee, you're working about the same amount of hours. Wouldn't you want to get more per hour of your work? Wouldn't you want to be doing something that you can consider yours? Or like, you can see the tangible results from your efforts. Because like I said, working hourly, you can work as hard as you want. Your wage is not going to reflect that. Yeah. And someone's still bossing you around. So, you know?
Like when you have fuck you money, you're like, you know what? Fuck you.
Yeah, no, you know what? Like, I'm done. That's it.
That's it.
Yeah, like, I'm just here for fun. I want to be here at a job for fun. I don't want to be at a job because I'm barely surviving, right?
What's your like ambition, like your goals? You know?
My ambition is one, to retire my mom, which I actually am doing next year. Next year, once I start full time. Steven now. So Steven now is maybe like here, right? This is 2024. July 10th is when I retire my mom. And in that, let's say 6-month period from November all the way to July, so that's actually like 8 months. I want to grow like crazy. You know, to get just 3 months ago, well now 4, before the summer, you wouldn't believe, but I was like down here. In just a 3-month time period, I grew like exponentially. One, because I had an internship. So that taught me so much about like the business world, the corporate world,
Yeah.
and I made a lot of money doing the internship. Second, I started like my businesses, this one that I'm doing right now to you, and then my product,
Yeah.
well, it's not on the table, but
Yeah.
I started that, and then I learned so much because I failed, I tried again, and what stayed consistent was that I was doing it every day. I was meeting new people every day. I was learning every day. And that was the first time in my life where I did this extremely consistently, 5 days a week. And that led to results that I can't even begin to like explain, because I just know, I remember what I was before the summer and then where I am now, and it's not the same person. So just in a little amount of time, even in 3 months, you can completely change who you are for the better. You can go from here to here. I want to be like up here by the time 2025 comes around.
Yeah. Oof. Yeah.
Exactly.
Yeah.
And that only happens if you stop overthinking and take action.
Just do it.
Just do it. Like, I don't care how uncomfortable you get. I don't care like what you think other people are gonna think of you.
Yeah.
So what? As long as you're not doing anything illegal, as long as you're not actively hurting someone,
Yeah.
then do whatever the hell you want. Because ultimately in life, it's just you.
Yeah.
Like, you see your growth. Don't you want it to continue to keep growing? That's what I ask myself every day. Like, do you want to keep growing? I'm like, yes, I do. So that's what my motivation is. Like, how much, it's really exciting for me. How much better can I get? I ask myself that every day. How much better can you get today? What can you learn today that will help you, in the future? That's it. We actually ran out of time.
Yeah. Okay. That's great.
But I hope you learned so much.
I learned a lot.
Yeah.
Yeah, man. It's cool if I pay you cash.
Yeah.
You know, cash is.
Cash is king. I might use that to pay gas today.
Yeah.
I'm driving back to LA.
Oh, for real?
Yeah, every weekend. I go visit my mom, and we have a great time. Go like eat out or something. How would you rate that session?
I would rate it.
I like. It
One
was
to
good.
10, it was like a solid 9.2. I learned a lot.
Thank you.
Yeah.
I will be sending you like a Google review link. I do have like my own Google page, so just drop whatever you think honestly on there.
Yeah.
And then I really appreciate that you came out today to learn. I
appreciate you for the time, bro.
Of course.
Yeah.
You can just leave the cash like in my bag.
Yeah, sure.
Yeah. The number one thing I love seeing in young people, and I'm still young, so
Yeah.
it's weird calling other people
Yeah.
young, but I love seeing people like myself that they're willing to learn, to grow. A lot of people are not comfortable enough to have this conversation
Yeah.
because they're too scared to look at themselves in the mirror and be like, damn, I really should be doing this. But instead, I'm okay with just being mediocre.
Yeah, man. I don't know. It's just like the mindset I have. You know, like once I started like the thing,
Uh-huh.
services, I hated like my father getting with my parents.
Yeah.
So I was just like doing my own thing. You know?
I see. That's a great motivation. Like, you want to be independent. And